After reaching an all-time high in June, Nvidia shares dropped nearly 30%. But with just a week left until earnings, the stock is back on the rise. Is now the time to buy before earnings? Well, our analysts Chris Markoch and Thomas Hughes are here to break down all that's going into this Nvidia earnings report. All right, so before the earnings, what are we seeing the stock price do right now?
Well, right now, what I think we're seeing is a pretty strong technical trend following signal. It's just a signal on the chart that shows the stock price has been trending higher, it's dipped, and now the market is buying that dip. However, this is a high volatility market. It's melting up now on the expectations for solid earnings, but I think volatility is still very much in play. I think that we would be likely to see a stock price pullback before the earnings are released, and there's certainly a chance of some volatility after the release. So I wouldn't go chasing the price action now, but wait for another one of those nice buying opportunities to develop.
Yeah, speaking of buying opportunities, some investors got in on Nvidia at less than $100 a share just a little over a week ago. What was behind that drop?
That was part of the fear of recession. We got some weak employment data that led the market to fear recession, and that caused the entire market to sell off. Also, we have sector rotation in play because the FOMC is supposed to be cutting rates, so the market was already set up to fall when that fear spiked. And I think this is just a natural market reaction to those forces. And once again, it's developed into a nice looking trend following signal.
So, earnings just a week away, Chris. Why are we
Mhm.
seeing this spike right now? Is this pretty common just before earnings?
It can be. Like Thomas said, the stock chart is showing a really nice buy signal for investors. It's had a nice dip. So investors are trying to buy that dip. It's also that would suggest that there's an expectation that Nvidia is going to put out a strong number. And if they do, you want to be in before the report because the stock will go up sharply after that. And if you weren't in there at that point, you'll have missed out on those gains.
Yeah, Thomas, what's the likelihood that we're going to see that strong earnings report?
Well, we're going to see a strong report. That's without a doubt. The real question is how much of outperformance we're
Yeah.
going to get. Right now, the analysts are looking for about 110% year over year revenue growth. This is on top of last year's 100% gain. This company has doubled twice in the last 2 years. EPS is supposed to grow 137%. So we're going to see some margin expansion with that leverage. The trend is for outperformance, but the analysts have had plenty of time to raise their targets. So it's going to be a strong report. It just depends on how much stronger than consensus it is. If it kind of matches the consensus target, that would probably be among the worst case scenarios for near term price because it means that all these gains have been priced in and we will most definitely see the price pull back at that point.
Thomas, do you have those specifics real quick? What kind of price targets are we looking at from analysts?
Well, right now we've got 44 analysts rating the stock at a moderate buy. They're showing a pretty firm conviction. That rating hasn't changed very much over the last year. Right now, the consensus target is about $132. That's 15% above the 150-day moving average. That's a pretty good target for firm support and a nice trigger point for buying and selling if it were to be crossed. The consensus target is rising. Most of the fresh targets are above consensus, leading to a new all-time high. So that is certainly a possibility. But once again, it's just going to come down to does the company perform as expected? Consensus is for 110% growth, but the high end of the range is above that. The whisper numbers are above that. So the market is secretly expecting to have a strong result, stronger than expected, stronger than consensus, has a pretty high bar to beat.
And Chris, let's get into a little bit of what that high performance would look like for NVIDIA. What are some things that investors are watching closely right now?
Well, one of the things that they're going to be looking for is an announcement or some clarity from NVIDIA as far as when the launch of their Blackwell chip is coming out. This is a chip that's going to be used more for industrial slash data center applications, and the launch has been delayed. And there is talk that it might get delayed from coming sometime in the last quarter of this year into 2025. Investors are going to want to hear about that because that is something that could weigh in on the stock's performance, not only for next quarter, but in a couple of quarters after that. Also, it introduces the idea that it gives other chip makers a chance to catch up. Now, whether or not that's going to be a serious threat to Nvidia in the short term, I don't know, but it's something that investors are going to be listening for very carefully.
Any concerns that there might be something that comes out at earnings that investors might react to and would make the stock drop again after an earnings report?
The biggest risk is just that the market is expecting significant strength. So Nvidia is really going to have to outperform by a wide margin to please the market.
Right.
Now, with that in play, there is some concern that September is the weakest month of the year for stocks in general and for the Philadelphia Semiconductor Index specifically.
Yes.
So even with a good report, there's a high likelihood that Nvidia and the entire chip sector could enter a consolidation or correct to lower prices again in September simply because of natural market dynamics.
The key here is going to be investors are waiting on pins and needles for the Fed decision on interest rates. That's coming up in September, as if there wasn't another potential pressure on Nvidia stock. You have to introduce that into play. And that's just part of a larger, the sector rotation that Thomas brought up earlier. It's the fact that you've got consumers or investors, who are trying to rotate out of perhaps some of the technology stocks, some of the chip stocks, and they're looking for what sectors might be better options when those interest rates start to come down.
So all that being considered and everything we've discussed here, are you guys a buy before the earnings report comes out on Nvidia?
Yeah, I think I'm in that camp, but I'm not going to be chasing prices. I do want to point out, though, that over the last month, there was a tremendous spike in institutional activity. So when the market sold off, a wide range of institutions, both public and private, from small to large, including retirement funds for teachers and for other large institutions, made very large triple and quadruple digit increases to their position. So that's a very clear signal from the institutional market that they were buying this dip, that this stock is buyable. They expect to see higher prices. So with the outlook for volatility right now, what I would really be doing is waiting for the next pullback, because that would be my trigger to buy.
I think Nvidia is a long-term buy. I wouldn't be chasing the stock right now heading into earnings, but I don't think that even if they really outperform in earnings, it wouldn't discourage me then from starting to chase the stock higher.
Want to keep your finger on the pulse of the market? Text the word YouTube to 68285. That's 68285, and get free breaking news alerts from Marketbeat for the stocks that matter most to you. Don't miss out on crucial updates. Stay informed and stay ahead.